Hello and welcome. Today is the 17th day of October 2019. All bets, trades, and of the like within each his own risk and their own reward. I've had it within this gold and silver stuff. I really have. I'm not selling any, but I'm on. It's like a protest. Until I get my way, I'm never going to show a chart again for either gold or silver. And maybe it's stubborn. I don't know. And my way is just show me a clear getting out of your boring correctionary phase because that's what Bitcoin's been doing here, but it's even worse than gold and silver. Yeah, it will do it, but you know what? It's just not worth covering any gold and silver until that happens. So then on to cryptocurrencies. Bitcoin, which is currently 8,079. I got two lines in. They don't represent lines for Fibonacci, rather just key levels for where it was. We can see all of these hits at 77. Well, basically the slot machine, all sevens on the BTC. And what does that line represent? Well, if we're going to break down, that's that area it's been to three different times. Will it be a fourth? Well, if it breaks down below, we can see the last 2 days, today's and yesterday's lows, 79.50. Oh, that's the key level. But why do we have this low in here? This line? Well, we have this support, this resistance. This support represents this left, the early resistance here, late September, represents this little failed support area, October 4th area. Let's take a look at this on a shorter term. And amongst the single hour, we can see just, okay, well, we have these exact hits in here, pierce above here, or exact hits back in here. And now we're looking at the possibility of a either that of a failed breakdown, which would be something in the area where I draw that little boxy thing that I like to draw. And this is total copy of Brian Shannon from Alpha Trends, who inspired me to make these videos. That's how he would draw it too. Just a little box like that. That's Alpha Trends. He does stock markets, usually on the weekends, Fridays. He'll always put a video out. Used to be every day back in the day, but anyway. And then for this to happen, you would have like, oh, any of this type of movement there after the fact, and you'd usually have a fast move afterwards. But when you have levels, oh, support becomes resistance, resistance becomes support kind of movement. That means you break a key level, which in this case would be support. You you then okay, so we're going to the slot sevens, yes, but it didn't do that here. It went halfway through, which happens sometimes. Sometimes they'll just go there quick with just straight moves. Sometimes it might not have broken this. There's no way you knew back in here it was going to break this resistance and then go to here. But you knew if it broke resistance. What do I always say? And again, this is what Brian Shannon always said too, and I learned it from him. When you break a key level, oftentimes just look for that area to be resistance. Well, that's what we're seeing here. But back in here, you didn't know. You're just looking for a break of either side after this correctionary range we can see. If it would have broke down below there, we're looking for sevens. Okay. So therefore, like I stated, the two ways before, you just go straight down, or you go, maybe it didn't go up, you would have ended up breaking the support and you go down. So those are the two ways. But the third way is you go down like halfway through, like a 50% kind of retracement, which was the case there. It's about 50%. And then you go resist what was that big support mark. And then if you start to go down this and you see action like this, well, now you know it's this option here where you break down, you have a significant move to a key level, which this is most certainly significant. And then you're going to rally, dead cat bounce, come back to where you came from, which is what this is. And then when you leave it, well, then you're usually going to go to here. So that's the easy way in which that I look at. Holding and staying above the price action in this little area here is now telling me, oh, possible failed breakdown and fast move I'd be expecting to be. A fast move is, a better word is decisive move. And then the key level to a good key level, and this would be at like previous high, a decent sized move, not a lame ass move. This would be a lame ass move. That's not like the fast move or decisive move. So it's not a good move. So more times than not, if this is that failed breakdown, we're usually not going to have a break at least to here. It's going to be at least to here. That's another way of putting it. Now on to Bitcoin dominance, which in here I just got all this data going back, the max that I can, going back to August, early August of this year. So this is the run up to what the high has been at 73 and a half. Right now it's 68 and a third ish. So this key previous low in here had the lower high from two previous highs. So the really the second lower high. Now within these small ones here, this all the rally from this one was get up to here, meaning from this bottom in here, which is October 9th or a little over a week ago, had the number gotten even higher than this, even to like 70 and a quarter, that would have been still lower than this. So that's a lame ass rally, but we're seeing what previous support becoming resistance. There's the breakdown in here. So since the fact it had a very short term run of 1, 2 higher highs and a nice uptrend, which obviously faltered in here and has made a move that did not support well, but just very little at this previous mark here, because we can see that it's what, 3, 4 periods, and it's just been grinding lower. So to me, this tells me right now, I'd like to say stuff like sellers are in control, or the biasness should continue to have a leg lower than we have here, based on the fact of how this move has faltered within the 18 at 3, 4 o'clock in the morning. I would have a very hard time trusting moves that has any type of 61.8% Fibonacci, or I wouldn't like the chances it gets above 68 and 2/3 as its maximum move if it's going to generate any kind of short-term rally. Okay, that's your Bitcoin dominance. Now let's look at one of them. Well, first one, Ripple against Bitcoin. I'm going to do the same thing that I did here before, just showing a lot of periods. I mean, the 18 is just whatever, but you can see where the relative price action is headed towards. If I wanted to see this with the 18, I would look at something like the 8-hour or daily chart kind of deal, which we'll do in a bit. But before we get there, let's just take a look at this on the single hour. So we spent the early part of this, again, from early August up until September 16th in the sideways range. We can see the interesting failed breakdown with a sort of cup and handle formation pattern right in here. I mean, I can't see more points, but on a failed move, I need to see a break a key level, and most certainly this is key. This was a very extended box, but it is what it is. But after coming up to this level, the cup and handle means that you first were able to have a good enough size rally to form the first U or V shape formation, and then you higher load it. I like that, higher load it, because it's past tense, but there's the higher lowing right there. And then from the higher low, you were at least able to come back to where you came from, which is, of course, here. This is where you came from. And like I say so many times, when you break those key levels, decisive move, and boy, was this ever decisive when it had that move, and it established this level of resistance. And anytime you have this, you're going to have a good correction. Good correction right here. And you expect when you have a kick-ass move to higher low it. I mean, that's not only do you have to higher low it, but you have to have continued momentum. At least get to previous high, which is what it did, and then further. Because, why I say that? Because you can easily higher low it, but then lower high it. And if this would have been a lower high and you started to retrace lower, which it didn't, then you'd be like, okay, maybe this might be a failure and stuff like that. So, therefore, instead, we establish this level of resistance after making that move. Whether that was supposed to be a key level or not is regardless, although if it's a key level, it makes it even better. But regardless of the fact you establish support, then you come in here. No, and when you have this was a good correction. So just like I stated in here, that when you have a move, you expect to make a higher low, because if you don't, you're looking at an ultimate failed move. And like again, better than 9 times out of 10, you're of course going to make in this case, a higher low. So in the situation here, of course, it's not it's nowhere near 90% likely from this low you're going to reach previous high as your next move in comparison to a decent move lower, which in this case would be where you came from, like 24 change. But after it got to this high, didn't break down here, it came back to where you would expect it to go. And you'd be saying, oh, where are we going next short term when we break this? Yeah, 3,200 and change, low 32s. Oh, that's exactly what it did, yeah. Then it came back to where it came from here, so what this resistance became support. So you already noticed that in this type of market condition in here. And you see breaking above this 18, why it's no big surprise how the market came up here. When it broke this, again, decisive move, there was basically no resistance at all, but most certainly support back on the way down. And what happens if you don't resist where you're supposed to? Because, oh, by all means, this level of previous high got resisted. Of course, it didn't here. Yeah, if you don't resist or support where you're supposed to, expect a significant further move to next level. So that was the case. And right now, this is the case here as well. After the fact, and now we can just go like this because that's the whole plan of this. Price action ended up establishing a level of resistance right here. And before then, of course, we had this little level. So when it came up to it here at 1 o'clock in the morning 3 days ago, did it resist it? Yeah, it did. But it mainly supported it. But it resisted it in the fact stop going up. That's what it did in the verbiage, maybe the wrong word of resistance. But it most certainly supported it. And then this level here, which I drew in, it wasn't like, oh, it came to this line. No, I drew this line in after the fact because this is what the high was, because that's where it went to. But you did notice that, oh, we have support here. So one, I was looking for support there if there was going to be any breakdown from that high. So I look, I see there was. Then as all of this time is going on, your analysis is, hey, wait a second. This thing is looking pretty good. If it could get above it, it could do well. And this is where you have to be so damn fast now. Because if you're looking for a clear, concise break to go long, meaning you know if it breaks a level from point A and it should go to point B, where would you rather get in? Here, 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 or here? Well, I would rather get in here over here. So in another sense, I'd rather get in here over here. Another way of putting it. But because these things do this so often, when you break a key level, so I'm going to go short term to long term on this. I didn't plan on going this way, but to explain this, let's now take a look at the short term and see how much time you had. I might as well do the 1 minute time frame. And that's how fast it was. You don't have much time. Sometimes that's an advantage if you're trying to sell. Because you're like, oh my goodness, I'm looking to sell 36.20. I mean, that's short term, albeit, but still. And then you end up getting somewhere around 36.75. Those things are cool. Especially when I look at something like this on like a hourly chart or something where something doesn't go up like 4%, it goes up like 40% kind of deal. And you're looking for a 15% move. That's what's good about this for that type of deal. But first, let's just look at how much time we had. If you're looking for a clear break, I hope you got in by 4:12. I mean, you had to get in at that time. 4:12 in the morning. 4:12. You have to be fast. So that's why that's one of many reasons I don't play that kind of game. But you know what? That's just how you do it. So now what would be the key lines you would draw in? The big high right now is here. This is the first one. This move didn't come quite close to it. It most certainly established a major sideways range like this. And there's that failed breakout. Failed breakout, why? Because it had a good move and it was unable to support where it came from, which is the upper end of this colored range. But there's no fast move lower. And we can see just in the last few minutes here, exitation of this range. It's right in here, starting at 14:59 or 3 o'clock p.m. It's 3:14. We can see the time down here. So at the start of this video, basically, is when that happened. So that's a statement right there. So now when I see a situation like this, something again I wasn't planning on talking about, so I'm going to finish Ripple off with the long term after I'm done this, and that'll be it for the video. There's other coins having nice moves too as well, as we can see with the Bitcoin dominance earlier on. But now what's important when you have a situation like this is to support what is a big level here, if it's even going to come back down. Obviously, you always got to keep note of resistance lines whenever you're in a range of whatever sense like that. If you break resistance to the upside, moves of this type of caliber become very live. but also holding where you came from. Now, it doesn't have to support exactly at this 36.97-ish realistic level, 36.95. But in here or whatever, this is really where, if it's going to be one of those things where you have a decent break, you only go up a little bit, whether it's here or whatever, or even here, and then you come back down. If it does, these things can happen commonly. It's probably more common that it doesn't, I would think, especially. But you look for the resistance break of whatever, because when I say that again, that means you got whatever rate of ascent that's constant, many turns, many periods, or whatever. And it's also at nothing of a spectacular rate of ascent, and this isn't that. It's just a regular one. So if you see a move up, oh, 37.18, one of the strategies might be you see something that does this right now, something like that. You go long at 37.18 because if you see it, you know you're breaking resistance, and the damn good chance you're going to be at least up to here, maybe even in 5 minutes or 5 periods from where you see this from. Okay, and you know what? It's looking like that's going to happen now. Because let's just take a look at some of them. I'm going to bring up Paint. I've already pushed my print screen button. Well, this one already broke, so I can't count that anymore because that's a long time ago. So what type of best scenario cases can I do? Something like that. Yeah, it really does look exactly how I'm thinking it right now. That if this were to have a decent sized move at any given time and it keeps this rate of ascent, that it's a damn good chance that this is going to happen very, very soon. Let's take a look at this now to finish it off in the long term. But before we do that, just for shits and giggles kind of deal, this is what Ripple looks like on the 1 minute time frame on Poloniex. Well, it just shows you the difference of exchanges, but I'm going to use this for long term because it's got more data. And it looks something like this when I look at the daily. But what I want to do is I'm going to multiply this by 100 million just because I'm able to do that with the subscription that I got. And maybe it'll look a bit better on a log scale. So let's see how it looks on the change. And this is the reason why I like log charts. It's because I get to see uh, in a more accurate, better way as far as seeing movements of the market. So to say 2017 was volatile within creating this high and low, yep. Price action since point A to point B, which didn't take long. The high was May, past the halfway point in mid-May, but it started in March. So 2.5 months is all that took to go from point low to point high. Since then, it has hit neither since. And it's all I could almost say, but I can't. It hasn't even came close to hitting the high or low since, but it did come close to hitting the high back in January of 2018. Relatively close here, but not really. And this is like all the low is like that's very far. And since then, this last one higher than this. But that's how we're looking at it. Now, within the 18, what I'll do is I'll basically something like the weekly or monthly chart. Probably the weekly chart will show me a better view on how I'd want to see the 18 average on this, which I'll look in a little bit. But for now, within this on the daily chart, what has the price action been doing? And now I see less candles. I can study a period by period basis, which is what I prefer to do. Seeing, of course, support of this resistance, and this thing has just been breaking out very, very nicely. Now, one of the things I like to do is a thing called Fibonacci. And which highs and lows would I go? Well, the big one is the two lines that I've already got drawn in, which is probably the one I'd want to do. What else do I have? This high and this low? And what about this high and this low? So for now, I'm just going to get my calculator up. And we got a line in at 445, even 446 on the round. Although it doesn't, if I put like 444, 451, anything in that area, it's not going to make much of a difference at all. So I'm looking at all of these key numbers. So let's just see how 94.29 reacts to this whole deal. So let's put a line in, say, somewhere around 94. Okay, well, There's a little bit of resistance here, but whatever. And then we got the line below that. So that's definitely one of the areas I'm looking for it to go to. But before we go there again, let me just get this thing up again. But after that, the 61.8 is 52.63. So that would be that's right now where I'm thinking that this target level is where I'm probably thinking it should go to, is somewhere around here within this previous high. And by chance, how was that a little bit above 24 as far as the fib? 2000. That really appears above. That's odd. That is very, very odd. Wow. Wow, that's shocking me like no other. But you know what, though? It's just one of those rare situations, I suppose. But yeah, I think that we're going to make a move up to this 5300 level. And I don't think we're going to be going down as far as our next leg. It's going to be up before down, meaning the next time we have a correction on here, if we don't go up here immediately, and we probably will not go there immediately, is that price action will at least come up somewhere around here and then correct within this 18 and probably this previous area where we came from here. Something like this and like that. That would seem like the probable level. And of course, if we don't find resistance here, or if we settle in and we wait in time, the next level I'd be going towards would be this, well, 10,000 Satoshi mark. Okay, then let's. So now again, I just want to take a look at all of this, but I'm going to do it within a. Let's take a look at this on the weekly. And amongst this, we can. Okay, well, there's the big high and the big low again. There's the low, and there's the high. So since that fact, whenever you have a big move, don't be surprised if the 18 low fails like that. Just as long as you hold the first support level, which it didn't do. This is a failed breakdown. And it went to a fast move to at least to its area, which was previous high. As I mentioned before, this isn't a fast move. This isn't the more likely move on a move. It's up to here. So that was its situation there. So therefore, when you have that, okay, you have your failed breakdown. You go to that key level you were supposed to. Now it's important to hold that higher low, which this is. So again, the fact that it didn't hold this, as long as this is the key low, which it wasn't, then you're okay. But you did have a failed breakout here, as you were able to establish this, but when you left this, and well, this low, like I stated, came through. So I guess before that 5,000 level, this is going to be pretty big, interesting here, because you now got the opportunity for the failed move here, which would be basically the same thing as here as far as intended target right here. Or even actually no, it'd be this here. This would be the intended target. Because you look at the volatility, it's like whatever normal move would be here. So fast move, it's just not, you can see the volatility sizes here compared to now. It's just smaller now. At any time, volatility can kick ass, but it hasn't yet. And if it breaks down and we see it go like this, then now we got to start talking about two levels. First, or second this, first here. But to me, it looks like we're going to make some moves higher. Alrighty, thank you for tuning in. Have yourself a great. Okay, I'm not done yet. No, because I just want to look at it this way. And when we see in here, as far as reversal of trend, stage one, and flatten out. Stage two, establish resistance. Well, that's about as minimum, so I might count that. But I prefer and I think I would like to see it come up to here at least. But don't be surprised if we come to here pretty quick. Again, all bets, trades of the like, that's within each's own risk and their own reward. And no gold and silver charts, maybe ever. No, it will leave correctionary phase. Thank you for tuning in and have yourself a good day. Bye-bye.